Faced with a recession, the government has been ploughing money into the economy to try and stimulate it. But all that borrowing to do so adds up. In today's pre-budget report, the last one before the next election, we got a flavour of the measures that will now be needed to pay for it all. National insurance rates will rise for everyone by 0.5%. That will apply to employees, employers and people who are self-employed. But it won't take effect for another 18 months in April 2011. From January next year, though, the stamp duty holiday will end and VAT will go back up to 17.5%. It had been cut to 15% to try and get people spending to help boost the economy. After bailing out the banks with billions in public money, there was public anger over bankers getting bonuses this year. So there'll be a 50% tax on any bank bonuses over £25,000. There'll also be a new tax of 50p a month on landline phones to help pay for superfast broadband. But it's not all tax rises and austerity. The basic state pension will rise by 2.5% in April next year, while child and disability benefits will also rise by 1.5% in 2010. Under 24s are going to be guaranteed work or training after 6 months of being out of work. Climate change is very much in the headlines at the moment, and today's report had a green tinge to it. The Chancellor announced a scrappage scheme to help people replace old boilers with new, more efficient ones. And there'll also be tax rebates for people with electric cars and wind turbines. On the economy as a whole, the forecast is that it will shrink by 4.75% this year. That's worse than the forecast of 3.5% made in April. The government also predicts that borrowing will total £178 billion this year, which is £3 billion more than they predicted back in April. The Conservatives said the spending plans were just not credible, while the Liberal Democrats accused the government of delivering an election manifesto rather than an economic plan. Ben Bland, Channel M Today.